Let us begin the summit's first panel discussion, where I, Yashi Vyas,
And I, Ishan Godial,
will facilitate the first round. Before we commence, I would like to extend our sincere appreciation to our sponsors whose invaluable support has made this event possible. Titanium sponsor Life Insurance Corporation of India, Platinum sponsor the New India Assurance Company Limited, Gold sponsor Arya.ai, and Silver sponsors GICD, SBI General Insurance Company Limited, United India Insurance Company Limited, Unison Insurance Broking Service Private Limited, National Insurance Company Limited, Agriculture Insurance Company Limited, and Acceltree Software Private Limited. The focus of this panel discussion is on embracing new age technologies and envisaging Industry 5.0, where we aim to explore the transformative potential of artificial intelligence, robotics, and quantum computing in reshaping industries. The discussion will also aim to address the technological and workforce changes required to integrate these innovations, emphasizing the need for upskilling and redefining roles in an increasingly automated world.
we are privileged to have Mr. Amit Roy, partner and leader of insurance and allied businesses at PwC India, as the moderator of this insightful discussion. Joining Mr. Roy on the panel are Mr. T. Babu Paul, Executive Director at National Insurance Company Limited, Mr. Debashish Banerjee, Partner Insurance Leader, AI and Analytics Leader at Deloitte India, Mr. Rajiv Gupta, President of PB Fintech Limited, and Mr. Neeraj Malhotra, CEO of Acceltree Software Private Limited. Please join me in welcoming our panelists to the stage. Before we dive into the discussion, I would like to invite my colleagues to welcome the dignitaries by presenting bouquets.
Before we dive into the discussion, let's take a moment to introduce each one of the experts in more detail. Mr. Amit Roy, Partner and Leader, Insurance and Allied Businesses, PwC India. Mr. Roy is a partner at PwC India Advisory Practice, leading the insurance sector practice. He has over 30 years of in-depth experience in setting up insurance businesses and consulting with the right focus on all relevant stakeholders. Mr. Roy has extensive exposure in the area of distribution management, customer relationship management, strategic turnaround, and establishing new business models across geographies for insurance companies.
Next, we have Mr. T. Babu Paul. Shri T. Babu Paul joined the board of National Insurance Company Limited as Executive Director in July 2024. With postgraduate degrees in Science and Management from Cochin University of Science and Technology and a fellowship from Insurance Institute of India, he has held key leadership roles in insurance sector. As MD and CEO of India International Insurance Limited, Singapore, he had significant growth and improved its rating outlook. At National Insurance Company Limited, he oversees investment operations, corporate strategy, and serves as financial advisor with a strong focus on reinsurance, compliance, and corporate strategy.
Next, we have Mr. Debashish Banerjee, Partner Insurance Leader, AI and Analytics Leader, Deloitte India. Mr. Banerjee, Insurance Sector Leader at Deloitte South Asia, brings over 24 years of experience in leading actuarial and analytics practices. He pioneered the actuarial function at GE Insurance India and Deloitte India with expertise across underwriting, reserving, risk management, and reinsurance. As a leader of Deloitte's AI and Analytics Service Group, he has driven innovative and data-driven solutions for the insurance sector. His strong global client relationship with the CXOs and multiple accolades, including being named a top 10 analytics leader in India, highlight his industry influence. Mr. Banerjee holds a master's in statistics from the Indian Statistical Institute and began his career at GE Insurance in Denmark.
Next we have is Mr. Rajiv Gupta, President of PB Fintech Limited. With over 34 years of leadership in BFSI sector, Mr. Gupta has successfully scaled businesses across banking, insurance, securities, fintech, and insurtech. As president of PB Fintech, he leads new strategic initiatives, risk management, and advocacy, collaborating with policymakers, regulators, and industry bodies. He serves on the board of PB Pay and other subsidiaries and is co-chairman of ASSOCHAM's National Committee of Insurance. He has held senior roles at GE Capital, ICICI Limited, HDFC Securities, Willis Towers Watson, and SBI Life. He is also a certified CFP and CWP.
Next, we have Mr. Neeraj Malhotra, CEO Acceltree Software Private Limited. Mr. Malhotra, an alumnus of Baruch College, City University of New York, and SNHU Manchester, brings over 24 years of corporate and entrepreneurial experience to InsurTech and Acceltree. As the CEO of Acceltree, he has integrated AI and RPA into platforms like agency management systems and leads management systems. A skilled turnaround strategist, his expertise spans InsurTech, SaaS, EdTech, BPO, ITES, and media, driving growth and efficiency. His prior experience includes leading merger and acquisitions and project implementation for multinationals across India and Brazil. Now, I would like to request Mr. Amit Roy to kindly commence the discussion, and towards the end, we open the forum for the questions.
Check. Thank you so much. Good afternoon, ladies and gentlemen. I am delighted and I also feel humbled to be a part of today's proceedings. As we all know, National Insurance Academy is an acclaimed name, not just in India, but across the globe now, because in many countries where we see insurance businesses running and making huge things for the country's development, people who are running those shows are actually alums of National Insurance Academy. I have also been a part of a couple of sessions that they run in terms of helping the independent directors to get associated with the nuances of industry, and that's another great thing. So I think no better organization can host the very contextual topic that we have for today's discussion. And I'm also delighted to have such eminent panelists about them, probably for each of them I can write a book, knowing them and having them on the panel actually makes me feel really happy because the moderator is really moderately learned. So allow me to speak less and allow me to ask them some deep intriguing questions, and they are friends from the industry, so I'm sure they'll tolerate that. And again, I'll mostly speak from the perspective of whatever I've been hearing from the market, from the consumers to be precise, from the people who would like to join the industry, and also people who are coming up with such interesting technologies, which we call in a very happening language of Industry 5.0. Delightful experience. I mean, I can believe that other day I needed something, and typically you plan for all digital products, going to the market, making, comparisons and challenges. And my son tells me that even if it is an iPhone, I can get you in 10 minutes time, and it actually arrived in 8 minutes, and that's technology. And that's where is the beauty of technology today. That's something which was not imaginable even 5 years back. We are reimagining the possibilities. Great time for insurance also. Insurance, as we all know, that it's a very, very complex game. It's a game where most of the time, if you talk to the industry players, the friends that I have, CEOs, the board members, and all of them, they keep complaining about not having margins for the industry. Insurance is something where actually on the other side, I see so many investors. In fact, this morning I got a little delayed to come for this event because a couple of investors from another country, they wanted to see the big possibilities that the country is posing for us. Everyone is talking about 5 to 7 trillion of economy. How much of that is going to affect industry is something that we should be touching with someone who have been actually, on the other parts of the world. So Neeraj, my first question to you is that I know that in your organization, you have been serving different geographies, not just in India. And you have been seeing that there are many solutions which the industry is taking up. My question is, in terms of the maturity of implementing those solutions for the consumers who is actually the in pairs, do you see a return on margin on whatever is being given? Do you see that they call for more, or do you see still graded and they are still trying out and it's still in that MVP stage as we consultants keep talking about it all the time?
Thank you. I think one of the big pitfalls of any business, be it insurance or insurance technology, is that technology once invested in must last a particular time frame, right? And the expectation from the industry is at least 10 years, that if I invest $1 million today in a platform, that should last me 10 years before I need to change it. So one of the apprehensions that I notice, insurance companies from taking a call is which system is stable enough, is robust enough, that's going to last me out for at least 10 years, and I don't have to invest in it again. And a lot of times I notice CEOs of insurance companies are hesitant to take that call. And now, because that call comes with a risk, right? Let's say I had an insurance company, I decide to pay company X $5 million for a system, and that system fails. What are the repercussions of that failure? Not only issues with data, with customers, with of course, me losing my job as well at some point in time. So what do CEOs who are smarter go ahead and do? They rope in companies like Deloitte, Cognizant, or the big five and say, you guys tell us which one to take. We'll take that recommendation and then buy. Now, not necessarily that system's going to be the best system, even though they're recommending, because they're not the industry experts. They are consultants, but not insurers. So the apprehension with insurers is which platform serves them best, and there's no holy grail, right? You can't choose one platform and think that it's going to service all your needs. So my thing is that the more comfortable that companies like us make CEOs and their teams and get in their shoes on what the real problems are that we want to tackle. And all day today, one thing which you will hear off and on again and again and again is AI. Okay, I attended last 2 conferences, one in Hong Kong, one in Singapore. They had 5 sessions going around at the same time, all talking about AI, with 70% of the people not knowing what AI is all about and how it can be implemented specifically to our industry. So technology is definitely a plus. It needs to be utilized, but corporations need to know where it needs to go, where is it enough, and when to stop. Otherwise, there's no end to it. You could continue to invest. And anyways, technology is a continuous process. You can't say, I'm compliant today, I'm done, and I don't need to do anything else for the next 20 years.
I'll come back to you, Neeraj, with my follow-up question on country-specific. Do you see difference of behaviors on that investment and that ROI? And is India a better place? But let me come back to you on that.
Sure.
Wanted to go to someone actually who have been seeing all these changes, technology adoption, and graduating from a 4.0 to 5.0 in a difficult space. And I'm talking about any public sector insurance company, not just have legacy system, but also have very well-learned legacy people. Sometimes that is strength, sometimes that is also weakness. If you talk about consultants you mentioned, I'm sure with Devashish also, and even with PricewaterhouseCoopers, we see that average age of employees would be hovering around 28, 30, that's it. So they are much more open, but in such places, the challenges are a little different in terms of how do you introduce and embrace change. My question to Mr. Babu Paul would be, in a large complex organization, I know that you are embracing technologies, but how are you navigating that mindset of change? And do you think only technology is able to help, or would it be something more? Because ultimately, all said and done, with 22% of your business covering health, you are doing a huge thing for the country, right? And probably people do not understand that the mammoth public sector undertaking insurance companies, one division could be as big as a size of complete company on the private space. So your thoughts on that, sir?
Thank you, Amit, for bringing in the perspective. We come from, the public sector companies come from an era of typewriters, and when we wanted to get into modernization, computerization, there was even a MOU signed with the unions that per day we will not do more than 300 or 400 key depressions per day. It was that bad in the late 80s. And later, as we progress, everybody wanted a system. The technology adoption was low. One is that we never thought that technology today would be a facilitator for so much. When you talk about artificial intelligence, these things come at a low priority for us, because initially when the sector was nationalized in the mid-70s, the mandate was to spread the message of insurance throughout the length and breadth of the country. Yeah. So all other things took a backseat at that point of time. So the mechanization slowly started, and with government companies, where consultants or no consultant, we should show the ROI. Yeah. So over a period of 10 years, we invested in computers, which we thought would last for 10 years. Then we found out that certain systems became obsolete even before they could be, unboxed. Unboxed. Yeah. That is the latest millennial term. Before they could be unboxed and put into use. So we come from that area, but we always feel that technology is not the end of it. See, artificial intelligence starts when natural intelligence fails, or when natural intelligence has to augment artificial intelligence. Absolutely. Without that, the artificial intelligence is what you call a deranged guy with a machine gun. So it can happen. So this is, and we are today laggards in the technology space, especially, see, today if you look at the whole insurance ecosystem, it is the distribution that technology has transformed. The other things are still way to catch up, which will come later. Distribution is something which we were laggards, but we are slowly catching up on the distribution front. Today, as I speak, 83 to 85% of national insurance policies are issued from outside office. So if but for that, with the declining staff strength, 5 years back we had 14,000 employees, today we have 7,000 employees, just about half. And the number of documents have gone up. So, but for this technology, but for the distribution, but for this, what we call capturing the low-hanging fruits, we would not have been able to survive in today's world. So I think that gives a initial perspective on technology and its adoption with the legacy companies. Back to you, Amit.
I think you touched upon something very interesting, and probably I would like to borrow the actuary that we have on the panel, and so people keep talking about taking technology from a level A to level B, unboxing and measuring all of that. But with all the technology investment happening, if we have to size the market, Devashish, and everybody is pretty gung-ho. Like first quarter, if you talk about FY25, GDP growth is 6.8%, one of the best in the world. We probably should clap for that because this is a country and potential of the country is never understood. So it's a great market to have, and that's where probably the investors are looking at it. What kind of size do you think? Would it be 20 times, 50 times? What do you see in next 10 years? And is it really as exciting, and could technology play a role? And if that be there, why are we not marketing the industry as the next employment generator machine,
Good points, Amit. Thank you. Happy to address that. First of all, very good afternoon to everybody. Really a pleasure and an honor to be here. You asked this very interesting question as to what the size like. Obviously, everybody's gung-ho about that. It's anybody's guess and it's a crystal ball. But one thing for sure it is that it is here to stay. Whatever we are talking about, be it AI, be it the Gen AI, now the new sort of kid on the block, of course, ROIs and the real implications of that are in the real scenario is yet to be seen. Yeah. But a lot of proof points are already there. A lot of early adopters of AI are already reaping the benefit that we are talking about here. And you look at it, it's never like that one big bang, right? It's always this sequential thing. So if I can just take a couple of examples. Yeah. Some of the things like fraud, very, very early days, 20 years ago, just the realization of a company that there could be a potential fraud was good enough, right? That fraud ho raha hai, leakage ho rahi hai. That itself was good enough. Slowly and steadily, all these kinds of regression, segmentation work started to happen, where banks adopted it, credit card adopted it, insurance companies adopted it, where once a transaction has happened, how likely that is that this is going to be fraud. Now, when the first early days that happened, everybody was like, is it happening, is it not happening? Today, it's almost like a basic. Everybody has that in their systems. Yeah. If you don't have it, you are sort of bleeding there, right? Now it has gone to the next level where at the time of transaction, whether there is a fraud or not, well, that we understand. Can we go back and really understand at what point in time somebody who is likely to make a fraud will be making a fraud, at which channel they will be using to do that? And can you do a behavioral nudge theory to avoid them to make that fraud at that point in time? So that's the level of sophistication that it is going. And the only way we will be able to do that is 2-3 things. One is the speed at which your internet and the linkages of systems that could talk to each other. That's one, which is obviously ever growing. 5G is here. We are talking about smart factories and whatnot. That's obviously here. AI, a lot of methods have come up, much more improvised versions, much more faster technology to be able to assess that, and a lot more textual video and all of that stuff. So it is here to stay. Now, the sizing, just last thing that I'd like to say is sizing would actually be dependent hugely on these one-off failures that if it may happen. And that I think our esteem gets in the opening remark, Tripathi sir, Mohanty sir, everybody spoke about the ask of having a good governance around that as well.
Compliance.
Because exactly, one failure around this could lead to a disaster, and we'll get into a pretty big, trouble. Nobody wants to go there, so everybody going slowly and steadily. But as a government, I think if we could, and I know the government is doing a lot of stuff there, as consultants, we have also come up our frameworks on trustworthy AI and whatnot. But it is super critical that we apply that and then go into all the use cases, and there are so many of them. It'll take the entire day if we go into those examples, but there are so many of them. If we take those two, we are talking 5 trillion economy that people are talking about globally, just AI industry. And insurance would be about 15% of that, where applications could be there.
Awesome.
And India obviously is, one other thing if I may, because
sure.
You mentioned a very interesting point. Everybody outside India is looking to India, especially in insurance, and thanks to IRDI and many other things that is happening in the market, that insurance for all, FDI increased. A lot of companies are trying to invest money, and they see this as a market. They also see this as an innovation capital. That's one shift that has happened.
That's a big shift, yeah.
Instead of us taking example from outside and saying we can apply this, now people are turning this table around and taking examples from India and then seeing how we can apply that. UPI and others are great examples there. So yeah, one could clap for that as well.
I think that's a great point, and we should be extremely proud of the fact. Thanks for reminding that. You would have heard about global captive centers, right? Would you believe that last 5 years, only in insurance, there has been 11 new players who have set shop in India for providing support to the insurance companies outside. And those supports are not in the nature of basic level of technology which used to happen. Today, actually, many of them are opening innovation labs. Many of them are shifting their underwriting. Many of them are shifting their entire data generation and AI factories sitting out of India. That shows the confidence that people are getting on the Indian talents. And I think thanks to National Insurance Academy for creating the right kind of talents to take care of all that demand. Because demand will be there. Trust my word, again and again I am telling you, demand will be there in this country with this 5 trillion economy on insurance, much more than whatever you can anticipate. Supply would be the issue. And I think I can't get a better cue from you to go to Rajiv on the issue of entire thing, which can actually derail all these great, indicators, is trust, right? Trust with a capital T in this industry is, if you allow me to use Hindi, is hila hua hai, right? People trust, but people do not trust. People respect, but people do not respect. So that dilemma, and I think they are the organization that Rajiv comes from, Policy Bazaar, and the group company have gone a long way to create confidence in the mind of people about transparency, right? And which in a way has helped the entire industry, that you can go to a place. I don't think ultimately how many of them actually buy from Policy Bazaar, but people definitely go compare feature, commercial, price. So what kind of behavioral shift are you seeing there, Rajiv, in terms of, are you thinking that more trust can be generated out of those platforms? Do you think that Bima Sugam is going to get that UPI movement? Or do you think more and more such platform generated distributions will happen? Because one thing is very sure, like Devashish said, growth is bound to come. Would that be supplied by traditional agencies, traditional broking, or do you think new business models will come up? Your thoughts on that?
Thank you, Amit. First of all, thank you, NIA. I think I should also thank you for producing the required talent this industry wants today, and I would request that you should have more such branches across the country where we produce more students, because that's the need of the hour, to be very honest. So Amit, now coming back to your question, I think India as an ecosystem will have space for everybody. I mean, we have been in this business now for the last 15 years. Policy Bazaar was started in 2008 as a comparison platform where it gave access to people to compare different plans. But as we grew from, a 1 crore company to a 16,000 crore company, we still realize that there is room for, growth on the digital space, but there is a huge room for growth for people who go and physically meet people. When we started, out of 100 people who inquired from us, probably 2 people bought policies at some stage. Today, around 8 to 10 people buy. But there are still those 90 people who come to us, but will go back to their agent or to a bank branch where they can meet the person physically to understand things better, reconfirm, and then buy a policy. As a company, we've realized that if I have to grow from where I am today to what I want to be, there is room for me to also operate offline, centers across the country. And that is what Policy Bazaar has been doing. Though we are a highly technology-driven company, we've also started building networks across the country, and we have covered 98% of the PIN codes. Now, the objective there is not to have physical offices, but at least have representatives in those markets. And through technology, what we are trying to do is create that literacy required across the country. I mean, today people don't know why they need to buy insurance. As you said, the trust deficit is a big issue. I mean, even those who buy are not sure they'll get their claims. All of you must have seen in the press a few days back that apart from the insurance business, PB Fintech is also trying to foray into the healthcare, business. That's the group company, nothing to do with insurance, but that's a group company where we are saying today the trust deficit is not only on the insurance side, the trust deficit is in the overall healthcare system.
Well-being.
So how do we improve insurance penetration from a low single digit number to a higher number? Is only through literacy, through building that confidence. We are doing our bit. We are doing our bit in terms of going to the media, telling people why insurance is important, but that's not enough. I think somebody will have to handhold people across tier 2, tier 3 cities, come out with products which are affordable. I can keep shouting from the rooftop, but if in a city I can pay 20,000 rupees premium for a health insurance, we need premiums of 5,000 to support, people in tier 2, tier 3 cities.
Great point.
So your question on Bima Sugam is certainly going to help. See, Policy Bazaar is just one such player. I think there is room for 10 Policy Bazaars in this country.
Absolutely.
Bima Sugam's objective of reaching out to the last mile is certainly going to help the industry and overall will support the growth parameters.
I think great points, Rajiv. And that makes me go back to the earlier session. I think the inaugural session that we had. And one of the comments that, our esteemed speaker, Mr. Tripathi mentioned is around geopolitical risk. And if you heard him, just to remind the audience once again, he had referred to the current disturbance that we are witnessing in between two nations, which are not only going to affect those two nations, it will have a rippling effect all across the world. And what is the risk? The biggest risk is unknown, right? Now my question is, when we are embracing technology and when we are looking at such unknown risk, probably the kind of variety that you see, because you are from a big public sector undertaking and also you have different geographies experiences, do you think technology can make our life easier in terms of assessment of unknown risk? More importantly, how do I price them? How do I make it affordable? The point Rajiv mentioned. How do I also make something which is rewarding for the businesses to run? So your thoughts on how risk is emerging, how risk should be measured, factored, and particularly such risk that Mr. Tripathi mentioned. I think that was geopolitical risk. I completely agree with that thought is probably going to be the challenge for everything that we are planning big for this country. It's not India alone which has to prosper. The world has to support that. Any such disturbances will destabilize and enhance the risk that we perceive much more, right? So your thoughts?
Difficult question. But then as insurers, we like the unknown, because if everything is known, insurance will not sell. So there has to be some unknown. Like they say, insurance contract is a contract between two people where one walks away with the money and the other walks away with the promise. And both the guys are nervous. the guy who walks away with money, that is the insurer, he's nervous with, did I price it right? What is the kind of claims that I will face? The other guy, the policy holder, is again nervous. First thing, will I have a claim? Second is that if I have a claim, what is my recovery? So as insurers, we like unknown. So I would like to keep the war to some extent unknown, because that is where we bring in the expertise of actuaries, the expertise of the experience. Now today on technology, the biggest risk or biggest facilitator that I see is that we have moved into a regime of de-tariffing, complete de-tariffing.
Yeah, correct.
So when there is de-tariffing, today, 2006, the pricing freedom came, but we still refer to the tariff. So it is 90% from the tariff, 75% of the tariff. Imagine a situation today, the tariffs are burned. You don't have anything to fall back upon. How do we price a risk? Yeah. How do we unbundle? Today, the regulator wants us to have a basic product, wants us to have add-ons. How do we price it? So this is a huge challenge, which in my opinion, only technology can solve, because India is not one market. India is a unique place where there is a drought in one area, where there is a flood in one area, where there is a snowfall in one area, and there is rainfall in another area. So it is technology, like Rajiv was telling, they were able to map physical touch points at 98% of the pin codes. Now, do we have that data? Can we crunch that data? And can we make the rating? Can we bring in a rating tool that the uncertainties to some extent is eliminated, and we are able to price it scientifically, so that end of the day I feel that, okay, I've priced it right. Anything more than my price, anything happening untoward is a risk which I have to cover.
Correct.
So that is why I'm keeping the war as an unknown, because as insurers, we would like to have more unknowns, which becomes a known unknown to us and an unknown to the clients.
That's I think can't be a better answer than this, that one of the reasons that insurance is so popular is because of it being unknown. And again, I'll fall back on the actuary. For Debashish, you have had experience of many geographies, and you have seen how insurance has emerged over a period of time. And also amongst actuaries, actually the risk modelings have changed enormously, right? When I still recall when the cyber risk came and the debates used to happen and all of that, when COVID spread out happened. And what many people do not know across the geographies, probably when it comes to paying claims, India has done the best. Do you guys know that? I interact with across the partners across the globe. If you know about the amount of claim which has been paid to people in India, is about 10x of whatever you have seen in comparison to the population. I'm not talking about the number of deaths or the number of diseases vis-a-vis to the total insurance claim. In that ratio also, India has done very well. So insurers did very well. So that risk modeling that Mr. Babu Paul was referring to, actuaries did a fantastic job. So what are your thoughts in measuring those unknowns and still making profit out of it? Or do you see that is going to be more difficult for the people?
Well, it is going to be, while unknowns can be modeled, the black swan event, as we say, that obviously is a very difficult thing for anybody to model, right? But the good news is that obviously we have got some techniques, at least, where it is slightly better estimate than what it could be without any estimate, right? So that's that advantage and the law of large number that the insurance companies play on, and maybe the investment income. So these are some components that we play on which become slightly better, and you are allowed to take that money and promise thing that he spoke about, that gives you some more confidence as to where it is headed. However, a few things like cyber, for example, that you said. It's an interesting joke in the cyber sort of community joke. No, it's a reality, actually.
Yeah.
5 years ago, they used to say there are only two types of companies. Either somebody who has had an attack, cyber attack, or is going to have a cyber attack. There were only two types of companies. Today, that narrative has completely changed. And people say there are only two types of company. Somebody who knows that they have been attacked, the others who don't know that they have been attacked. So how do you measure these kind of things?
Correct.
And how do you promise that I will always take care of this and all that? Certainly becomes a difficulty, but I agree there are methods, there are ways, there are some bold decisions that one has to take. And it is important and very critical, as all of us are from insurance. Insurance is not like retail, which is, 2 years you start to see an ROI and things like that. You look at all insurance companies globally who are successful. It's a long-term game that you're playing.
So Industry 5.0, with
Yeah.
the advent of technology, are you seeing actuaries getting supported with, let's say, Gen AI? You spoke about different applications
Right.
of AI. Do you see enough applications of all that helping insurance to become better?
So I think Gen AI may not as much help in actuarial pricing, my view.
Yeah.
Because Gen AI is very content heavy.
Absolutely.
It may help you a lot in your underwriting and claims than in actuarial, possibly. However, the connection between the dots, the transparency with which news can flow in, some new sources of data that was not available, which is now available, right? All your earthquake, seismic movements, volcanoes, all of that you can now draw upon weather reports.
Yeah.
You can actually map where, I'm sure all of you have seen that or looked at it, but a lot of reinsurance companies actually have these weather reports where anytime a cyclone or a hurricane hits, or a tsunami hits, they actually map where all it'll go, what's your insurance property sets that you have insured. It can actually tell you day by day what kind of losses you're going to incur. So things like that has obviously improved. But black swan events obviously becomes a little bit of a challenge. So will another COVID-like of event that happens, I think they can price because they've seen one experience.
Yeah.
But if it is completely different type of, and especially wars and all, that becomes extremely difficult as well. So
You would see that we are referring again and again to the earlier panel's discussion because in fact the plenary session that we had, because I think that set the context in a great way. And Neeraj, I always derive questions out of all the interactions, that I have with the friends from the industry that I have. One of a very interesting question that I got from a friend from media houses, is that, Amit, what's your view on insurtech companies collaborating, exchanging enough informations, or do they work in silo? Do they really have that, ultimate, the bigger vision? And I advise that our next panel is going to discuss about it. Why don't you wait? And Neeraj, that question that many people actually think, and it's not that friend from media that I had this question from. Many players I have seen is that they have a strong feeling that not enough collaboration is getting instituted. But hats off to the regulator. Today, hackathon happens, at least to the best of my information, periodically, organized by IRDA. Can you imagine? That's the kind of innovation push that the regulator is doing. Now, in that backbone of that, that kind of a support, do you see enough collaboration amongst the insurtech companies to make things better for the industries?
To answer your question directly, no. I think we insurtech companies can definitely do a better job of aligning our goals and sort of guide the industry from a technology perspective, right? Most insurers, what I see, have big IT setup within themselves, but those are mostly on the service side. They are, either call centers, small tech teams, but the larger vision is only shown by the insurtech companies that need to do a better job on collaborating and ensuring that they guide their own customers, B2B customers, in the right direction. So I think if the government sector, IRDAI, anybody plays a larger role in aligning insurtech companies, it's not about making a sale. It's about guiding the future of insurance.
Absolutely.
And COVID has taught us a lot. I think every sector, like was mentioned earlier, we went digital in a big way, but now we are at a point. How much of digital? Ours is a push industry, as I keep hearing as I attend more and more summits. The agent still wants to sell on one-to-one contact. Policy Bazaar was a big disruption. I think when he mentioned, 8 or 10 buy, come and then 2 buy, what would be interesting to see what age bracket is that is buying and what is not. And just to cap it up, it is what I call Gen Current or Gen C, which is us, trying to create technology solutions for Gen Z and beyond, who have probably a much larger understanding of technology, its applications, and how much or how little to use it. So that's a challenge too. So to NIA's credit, the new generation that's coming up should be put into the workforce as fast as possible, and from a technology perspective, because they will bring that fresh perspective, what is needed for their generation, and it should come from them mostly. We can guide the policies, we can guide the platforms, we can guide the technology solutions, but the buying pattern has to come from them.
Neeraj, great point that you brought in around age and the segment where Industry 5.0 should go. And Rajiv, I would come to you before that. I wanted to share an anecdote. Recently, I also heard from a friend of mine who happens to be in the gaming industry now, okay, by chance. I always thought that gaming industry is an industry dominated by Gen Z. Yes or no? Most of the people feel yes, right? And we all are wrong. The gaming industry, I am told that 62% people are above 60. Can you believe this? And do you know which game they play? They play Ludo. I am not joking. And it's extremely addictive. And government is actually worried about it. I was talking to someone, a friend of mine who happens to be a bureaucrat, and I was told that in gaming industry today, the economy size is 85,000 crore. Can you believe it? Yeah? Now, with that background, and very interesting point, thanks Neeraj, that you brought in about age and adoption of technology 5.0. Rajiv, what's your experience? Which are the people who are going to Policy Bazaar? Do you see a shift in age? Do you see a shift in preference? Do you see something that it is getting more adapted, or trust is more for Gen Z towards technology? Because on one side, that looks logical, but that gaming industry statistic tells me something very different.
I think surprisingly, no. Policy Bazaar's 80% business comes from age bracket 30 to 55, and we still, and we also have 20% business coming from above 55 as well. So I think clearly the need for efficiency is felt by everybody. That's the real message. But since you spoke about age, let's talk about future. I think one of the biggest problems this country is facing today, as you are aware, or will be facing in future. See, today 10% of our population is senior citizens, right? We proud ourselves about the younger population sitting at the back, and India is obviously gaining out of that. But 2045, 2050, 30% of India's population will be senior citizens. And 65% of India's senior citizens don't have any income support. Forget joint families, they don't have zero pensions, no income support. So what are we doing to today's 40-year-olds who will be 60 plus to ensure that they take care of themselves by having a pension plan, or at least having a health insurance plan? So that's the future we're talking about, age bracket, right? The idea is we all talk about missing middle, we talk about tier 2, tier 3 cities, but I think somewhere we will need to address this problem of penetration and think future. And how do we address it? Yeah. And that is where I think the market is lying. That is where going to the market and telling people that, so while digital companies like us can do our bit, I think it's important to create that trust. Your earlier question about, trust, by building transparency around buying policies. Whether it is agents, whether it is corporate agents, whether it is brokers, are we encouraging customers to declare whatever they have to declare honestly? I think one of the biggest problems which we face today is wrong declarations.
Yeah.
I remember when I bought a policy, in 1990 when I first joined my job, all I did was signed the application form. Not that I regret, I have got all my dues from LIC, but from that scenario to people today, at Policy Bazaar, our declaration rates are as high as 65%, which is why our claims ratios are less than 40% on health, which is unbelievable, right? The industry health claim ratios are much higher. So I think somewhere all of us will have to build that trust by encouraging people to declare whatever they have to declare, whether it is existing diseases, and then tell them your claim is, obviously we are the best on claims, as you rightly said, but can we make the claim experience far more superior? And that trust can help us, make the claim experience far more superior.
Debashish and I come from the organizations where we keep researching almost like a behavior. And one of the things that I'm sure Debashish will agree is that many of you would not know this. India is cheapest when it comes to health insurance across the world in terms of money that you pay, right? That's one part of the world. The other part of the world is India is worst in terms of claim repudiation statistics because of the disclosures that Rajiv made, and I'm glad that you made that. Because whenever you talk about trust, trust has to be two ways, right? And I think I will go to Mr. Babu Paul to talk about the other point that Rajiv made, that at least from the government side, we see there is an initiative that above 70, everybody will get a coverage of Ayushman Bharat. Now, I don't know what analytics support Debashish will provide for making it again profitable and also something which will be sustainable, because 5.0 is all about sustainability of stuff, right? It's not about technological advancement, it's not about growth, it's not about profit, it's about sustainability. So with huge amount of exposure and also experience that you see out there on that, the disclosure that Rajiv made that point of, how do you think we'll manage this situation? And do you think that on the one side, the customer is expecting premium should come down? On the other side, what has happened to the moratorium that we saw where 8 years of waiting period came down to 5 years? And at least one of the PSU took the initiative in jacking up premium by 11%. So I'm not sure, how do you interpret that and your thoughts on that?
The classic definition of insurance buying is that insurance is something which you buy when you don't require it, so that it is there when you require it. So post 60, post 70 makes it little vulnerable. But then as an industry, we have to support, because I completely agree with Rajiv, 20 years down the line, we would be maybe like China. Say today, the age-old population is catching up. China's problem with this single-child policy is that there are a lot of relations that they don't know. They don't know what is the relation between a brother and sister, because they have not seen a sister or a brother. There's nothing called cousin. There's nothing called uncle, auntie, because it's one-child policy. Yeah. So if your father, mother has a brother, only then you have an uncle. Correct. So we are also now slowly moving into that situation where you'll find a lot of people in this senior citizen level not having proper adequate insurance. Now, like Rajiv said, disclosures is a major issue that we are also facing. 65% is good enough in India, but then anywhere else it should be 90%, 95%. Absolutely. Now, banking sector has brought in something called CIBIL. So after the CIBIL rates, CIBIL scores have come, you pay your credit card on time because there's one default brings down your CIBIL score. Maybe government should, or maybe regulator, Tripathi sir is here, we should think of something like that where your moral hazard score or your health index score or your driving habit score should be available slowly. It takes to bring in maybe 70 crore of people or 100 crores of people into that net is difficult. But once you have that and once you price it up, then that helps us in pricing. Because for an insurer, we typically say that a bad risk cannot be made up by good premium. And if it's a good risk, any premium is good enough. Even 1 rupee is good enough if it's a good risk. And for an insurer, the biggest risk is moral hazard. And how do we address this moral hazard? Unless we have some scores like CIBIL coming in, it's very difficult. And again, we also should have a sort of a tie-up with the hospitals. Rajiv's company is getting into healthcare delivery system. That is one area where whatever we do, the provider decides the rate. So we can price it, actually can price it, we can sell it, but the provider completely upsets distorts the entire thing. So unless we have a disclosure, a provider management, only then the insurance for elders will be fruitful. Because typically we say that you pay premium between your 25 to 45, 20 years with hardly any claims, which will provide you support between your 45 and 65. And once you cross 65, and if you are good enough, then 65 to 80, we may not have much claims, because even our claims ratios on people above 75 is very good. The vulnerable age is between 45 to 65. So that is where, so we need to have a completely different model, pricing system, healthcare delivery system to take care of this elder population. And I'm glad that Rajiv brought it out, because unless we start thinking today, come 2040, 2045, many of us, like today we are in the 40s and 60s, 40s and 50s, we'll be in our 70s and 80s, and we will find it at a very difficult time.
These guys are scaring us. So let me go to Devashish. In terms of with this analytical model, can there be a better story? Thanks for jokes apart. I think thanks for putting across a very important point. And yeah, and that's a selling point, and that's a point that we often forget, that in this selection of good risk and bad risk, Devashish, sometimes do you think that good risk are actually paying excessively for bad risk? And can the National Digital Health Exchange and all that which is happening now can help that?
Certainly that is.
Actually, no, I want to have a question for him too. If I was considered a good risk between 20 to 40 and paid my premiums, and then became a one episode bad risk at 42, how many insurance agencies would raise my insurance cover from, let's say, an initial 25 lakhs to 50 lakhs post the bad risk? And that is a very critical concern that me as a buyer has, that when I didn't need it, I could take 50 lakhs, not worry about it, pay them the full premium.
So again the trust.
In the
right?
trust,
Again
absolutely.
The trust. Yeah, Devashish.
Right. So clearly, while the government can do all the scoring, we will have CIBIL kind of rate. This is bound to happen at some point in time. India has a little bit of a challenge as opposed to US and Europe, where health records are maintained very diligently, let's put it that way, which we are yet on a journey. Yeah. And so at some point in time, this will certainly come when it comes to health. Motor, clearly, every insurance companies now, any time you renew, everybody knows about your information. Yeah. The only thing they ask is whether this year you have made a claim or not, and things like that, right? So it is getting connected, let's put it that way. Whether government does it or not, I think as insurance companies, it is imperative that you start to bake in those kind of micro segmentation in your modeling analysis. A few companies that we have seen across the globe, even in India, who have done that, are the ones who are going to be successful. And along with it, if I can add, the flexibility to make your products and the boldness, right? It's the CEO and the board's kind of a decision. The flexibility that you want to allow to take these kind of risks as well. And this is a very, very classic example, like you said, about the health. I'm seeing that in my house as well. For example, my mom is 70 plus, and nobody would want to port the health insurance after 70. But here is a fun fact. She has never had, and touch wood, she has never had a hospitalization claim in last 50 years. But still the premium that we pay is exactly the same. And they are giving me all that, whatever compute bonus and all that. I'm like, I don't need that bonus. You give me a lesser premium, because after 70, premium has skyrocketed. To the extent, I couldn't explain this obviously to the agent, the call center agent. To the extent I said, if I have kept that money that I have paid to you, I would be insuring my mother much more than where you are insuring. But you are an insurance company, I am a person, right? So law of large numbers, somewhere it is failing. So I believe that we have to do a lot of work on doing this micro segmentation that can be done only basis data. To the extent I actually tell my finance guys to really help us identify how you can say data and analytics as an asset in your reporting systems. Because it is an asset, and some companies are sitting on it, which will be super valuable as they start to implement it. And in insurance, we have done a little less than, let's say, retail or telecom, who has really mastered it right now.
We are left with 8 minutes, so rapid round for all of us. Two basic questions that I get confronted from many people all the time is that insurance is a great industry. We all agree. We agree, we disagree. We agree? Can we see hands? Very few hands. Yeah? And I'm not surprised, right? This industry doesn't have glamour. So college graduates, given an option, will go to an investment banking career much more, running actually, but an insurance company, a strict no-no. Okay? So any thoughts of adding glamour to this industry from any of you is my rapid round question. Yeah? So, yeah, we start with Mr. Babu Paul. We have to be really quick now, last 7 minutes left.
Actually, that is the answer I was searching for the last 30, 35 years. We find that insurance is a low profile industry. Yeah. See, we are associated with all misfortunes. When he pays the premium, that's a misfortune to the client. When he has a claim, that again is a misfortune. When we talk of indemnity, that's again a misfortune, because it's after an insurance claim, it is never indemnity. Whatever you say, it's never indemnity. Correct. Look at the banking sector. Yeah. Banking sector takes your money and then lends it back to you at 2%, 3% intermediation charges. But you're very happy, because when you're buying a house, banker is remembered. When you're buying a car, banker is remembered. When you get married, banker is remembered. When you go for a foreign holiday. So insurance can never be a high profile or a glamour job.
Can technology do something?
Technology can do something, but then that I leave it to Rajiv, because he's there.
Rajiv, yeah.
I think, Amit, certainly there are two ways of adding glamour. One is obviously hire all the Bollywood guys, give them a job. The other way is we speak about insurance. What is insurance? At the end of the day, insurance is about making people feel happy, And if many of us sitting here, draw glamour out of making people happy, I think that's the solution. In my opinion, ensure that everybody around you, everybody is made aware of why insurance is important. If there is lack of knowledge, ensure that you provide that knowledge and give that satisfaction and bring that smile on their face. I think that way you'll become more popular than probably a Bollywood actor. Super. If you can settle as many claims as possible.
Mm-hmm. Any thoughts, Neeraj?
See, as an industry, we capitalize on people's fear about the unknown and get them to pay for it. If you de-glamorize that and say it's not about fear, it's not about future, it is the right way to go, and sort of take away the unknown factor away from it, right? So if I'm investing, if I'm paying X amount of rupees for my kid's education in a school without a question, we all do, right? We never ask, why is it 15,000 a month or 20,000 a month, right? Compared to that, is my premium for health insurance as big as that on a monthly basis? So I'm investing on my future in both places, right? Future here in my own health. True. And future on the kids. Yeah. So de-glamorize it by taking away the risk and not making it something that comes out of fear, but as business as usual. And that would make it, I think, happen.
Superb.
Just,
Yeah,
just
Devashish.
just two quick thoughts. One is this entire AI analytics, data-driven approach.
Yeah.
I just sometimes fail to understand this. The entire genesis of insurance companies is basis this data that they used to analyze. If you all remember going back to genesis of how insurance came in, is when the ships were sailing, people would play a bet, and whether, based on the past data that they will have, they will say whether, what's the probability of this coming back. If an industry is standing on that probability, which is completely data-driven, what happened? Where did we lose our shine? Where nowadays the examples are Amazon and retail and telecom who are going particularly to that level and really analyzing data that we ideally should be doing. So somewhere we have lost that track. We have to come that make that shine again using this data. I think all of you have covered most of it, but if I can add a little bit of a different thinking here, that we have to do a lot of work to really get the glamour back. Like, are we paying the claims? I mean, simple things. We are not taking both. Simple things. Every health insurance, and I can bet on this, every health insurance, the moment anybody's parent have gone through a cataract operation, they would have ported their insurance company. And if that is happening, why are we not changing it? It's hardly a 10,000 rupees extra that you have to pay, but then the customer is happy and you get the customer going on, like the policy holder going again and again. Because every time, oh, why are you not paying a multifocal lens? You're only paying single focal lens because you didn't see where to bought, and this and that, all kinds of arguments happen. This is just an example, but I'm saying there are multiple of these examples and we have to get those right. Otherwise, this is not happening. Like I said earlier, the new generation that is coming up are so much used to pay per service, in the sense, when Indigo gave pay for the seat, aisle seat is expensive and window is expensive and all that. There was so much of a hue and cry around this. Heartburn. Today it's a standard, and the new generation wants it that way. That you give me this, you give me those, you flex me on this. That opportunity we have to give, and we have to make ourselves agile on product and pricing to make it happen. So
I think from my side, two wish lists that I have for getting the glamour to this industry, and I'm so glad that Mr. Tripathi is here. Is there a way that the policy makers make insurance and inclusion in the academics right from the school time? So as an awareness, that should go up, okay? Risk, financial risk is something that we do not know. Most of you will agree that the only reason of getting insurance is because you have been pushed by someone or you could not say no. That's my wish list number one. Wish list number two, to all of us, to the industry, to the fraternity, consultant like me and Devashish, somehow if we can enhance the trust on this industry, I am very, very confident that glamour will come back and there will be queues of people, lining up and signing for insurance and insurance selling. I think we will conclude the panel here. Can't thank the panelists more than enough in terms of being so candid with their responses. I think it was great discussing with all of you. Last 2-3 minutes, if we can make it open.
I want to add to Amit's wish list. If there was a way that we could do away with the fine print that can give cataract to anybody, that would glamorize it.
Sure. Yeah.
Let me respond. While I agree that the insurance education in this country has not kept pace with the way the industry has grown, policymakers and insurance fraternity has risen to the challenge recently, and I think in the near future we will see a plethora of activities in increasing the insurance awareness and education in this country across various regions. Now, regarding glamorizing this industry, I will leave you with a thought. Just think over it. Logic is an invention of humankind. The universe doesn't follow logic. That is why you find people and system responding in bizarre ways to various things, and in real life things don't add up. The way you think it should be like this, it should be like that, this is scenario 1, scenario 2, it doesn't fall into that thing. So that is why we say that we should be prepared for the unknown. Why he behaved like that? Why the market went up like this when everyone thought it should go down? That is because the universe as a whole will respond differently. You can have n number of logic. Thank you.
I think great answers, and claps for Mr. Tripathi for being candid. And I think on behavioral analytics, we should have another panel discussion sometime with Debashish, and there are many opportunities. But any questions from the audience for last 2 minutes before I hand it back to the MCs? Yeah, I think they are.
I'm Sitanshu here.
Hello.
Hi, Amit. Yeah, you talked about glamorizing. Is anybody aware that what is the remuneration thing that is happening in the insurance industry? And isn't that enough to glamorize the industry? It is almost on par with the rest of the financial sector services. And what more you want to glamorize the insurance industry than the remuneration itself?
Okay. Anyone? He means to say how much of income has happened and why that isn't enough for glamorizing. Any thoughts on that? Intermediation remuneration.
If I can.
Yeah.
Okay, let me answer this question in 2 ways.
Take this one. Yeah.
Firstly, I think somebody mentioned here, insurance is all about push, right? It is not somebody who comes and buys. Selling insurance is not as easy as all we think, And there is a perception that everybody who sells insurance makes a lot of money. I think that is the wrong perception in my opinion. There are few people who make money, and there are majority of people who just are able to meet their needs, but they are still there in this profession. When we spoke about glamour, the idea was, how do we make more and more people come to this industry and to be a part of this?
Attract talents.
To be a part of this. Let me give you an example. I spoke about that in my address. We have now this claim ambassadors in 265 cities in the country, And one of our claim ambassadors generates more than 200 leads every month because of his claim service he has given in that city. Yeah. And that not only gives him the income, but also gives him the smile. So people know him more, he's more popular than the person who sold a policy to those guys, So somewhere I think attracting talent and bringing, smile in people's face is what we're talking about as glamour, not necessarily making money, not remuneration,
I think to manage the time, we'll take one last question. Someone wanted to ask from here.
Hello.
Yeah.
There was mention of Bima Sugam. So will it compete with Policy Bazaar or it will help it? Because it will act like an aggregator only. So how will that work with Policy Bazaar?
As I mentioned to you, if you look at insurance penetration in this country, we are at low single digit, right? India has 150 crore people, and 80% of those people live in tier 2, tier 3 cities, or I would say more than that, Is Policy Bazaar there in every nook and corner of the country? I would say no. Even in tier 1 cities, we've just scratched the surface. What is Bima Sugam trying to do? Bima Sugam is trying to create an environment which is accessible by all kinds of distributors. Making technology accessible to one and all will only further improve penetration in this country. So I think it's not a competition. It is a welcome move. I would say more and more people should get into this space.
Any addition, Devashish?
Absolutely, I think that's coined as the UPI for insurance. We absolutely believe that will give a lot of benefit if we can get this to the last mile, especially the rural side of penetration. But long ways to go, but a right sort of step in a direction. So,
I think I am super proud that Bima Sugam is happening in India for one single reason. In this large country, we have the regulator, the entire industry put together, technology, lot of technology players, InsurTech, all of them are contributing together to make it successful. That effort calls for a lot of claps because we are the first nation in the entire world to do and attempt something like this. Yeah? So that itself is a great story.
I was about to say, that is another example. It could become another example that other countries could adopt, right? Nobody else have tried at a massive scale that we are talking about here. So absolutely, we should make sure that that's successful.
And I think one step that the country can do for insurance for everybody is something like a Bima Sugam comes in and says, if the parents pay a small premium for themselves and their own insurance, the kids' insurance up to the age of 21 is free. Now, as an actuary, he would know up to the age of 21, there's going to be barely any claim. But you've gotten what Apple did, induct those kids who are growing up to the concept of insurance, which when we were growing up, doesn't even come into a vision till 30, 35 years of age. So that's what I think Bima Sugam is going to be disruptive about. And there's enough room for everybody.
I know Dil Mange more, but we also have time constraints, so back to the MCs, and thank you very much for being a great audience, all of you. Thank you.
Ladies and gentlemen, that brings us to the close of what has truly been a thought-provoking and enriching discussion. Our heartfelt thanks to each of our esteemed panelists for sharing their deep insights and forward-looking perspectives. To express our gratitude, I would like to invite my colleagues to present mementos to our esteemed panelists.
With this, we conclude our first panel discussion.